Welcome to the deep dive. Today, we're taking a really close look at something investors seem very keyed up about: unsupervised, full self-driving tech.
Yeah, and it's not just, cool cars. We're talking about the potential for a really massive new industry
A
here.
fundamental shift, maybe?
Hey, think about the internet, smartphones.
Yeah.
FSD might be in that same league, or even bigger for how we, live and move.
Okay, so our guide for this deep dive is a recent Motley Fool piece. It really focuses on how Wall Street sees two key players.
Right, Pony AI and the one everyone talks about, Tesla.
And our mission here, basically, is to figure out why the analysts seem so split on these two.
Exactly. What are the key things driving these different recommendations?
Yeah.
What should you, as someone following this, be thinking about?
Right, let's dive in. The article starts by emphasizing just how high the stakes are. Get in early on FSD.
And you could grab a huge chunk of the market. That first mover advantage is, potentially enormous.
Think about all the data they'd collect.
Oh, absolutely. Real-world data to just keep refining the tech, getting better and better, faster than competitors. It feeds itself.
But the article makes a really good point. Developing the tech, that's kind of step one.
Mm-hmm. The real hurdle is making it a business, commercializing it.
Going from cool demos to, actually having these things driving around everywhere reliably.
Yeah, and that's complicated. You've got regulations, public trust, safety.
And the whole support system you'd need.
For sure. It's a long road from lab to large-scale deployment.
Okay, let's shift to Tesla. The article actually calls it the great battleground stock of 2025.
That phrasing tells you a lot, doesn't it? Huge disagreements.
And it seems a big part of that is, Elon Musk's public profile, his involvement in things outside Tesla.
It's interesting how leadership's actions, even unrelated ones, can sort of ripple out.
Right.
Affecting investors, maybe even customers.
The article hints that for some, it's become a real concern. Brand impact, feature sales, that kind of thing.
Yeah, and it connects to performance too, perhaps.
Well, the piece mentions Tesla's Q1 2025 deliveries. They came in lower than expected.
How low?
337,000 vehicles. Apparently the lowest quarterly number since back in 2022.
Okay, so that naturally gets investors asking questions, adds a bit of uncertainty about near-term growth.
Definitely. Combine that with any brand worries, and the risk calculation gets, trickier.
But FSD is still central to Tesla's story, right? And its valuation.
Absolutely. The article stresses that a huge piece of Tesla's high stock price is built on the expectation they'll nail FSD for the mass market.
And they're making progress on the tech side. The article mentions testing.
Yeah, over 50,000 miles reported for their driverless tech testing.
That's a lot of road time, a lot of data points.
Invaluable for training the AI, dealing with all the weird edge cases driving throws at you.
And they've got this event coming up.
Right, June 2025 in Austin, a demonstration. The buzz is people might actually get to ride in a self-driving Model Y.
That could be a big moment. Seeing is believing for a lot of people.
Moves it from abstract tech talk to something real you can experience. Could really shift public perception.
And the company's pretty confident, judging by recent statements.
Seems so. The CFO, Vaibhav Taneja, apparently said on the April earnings call that Tesla's FSD is safer than a human driver.
That's a bold claim, a really direct assertion.
It hits the core safety concern head on.
Yeah, but proving that statistically, rigorously, to regulators and the public, that's the key.
And Musk himself, on the same call, went even further. He predicted FSD for personal use.
When?
By the end of 2025. In many U.S. cities, said you could theoretically sleep on your way to your destination.
Wow. Okay, that is extremely ambitious timing.
Yeah, the article definitely picks up on skepticism around that timeline. Urban driving is complex. Regulations are still evolving.
It feels like a stretch for this year, doesn't it?
Wall Street seems to think so, or at least they're divided. The analyst reports from the last 3 months.
What's the breakdown?
Out of 37 reports, 16 buys, 10 holds, and 11 sells. Pretty spread out.
That really shows the uncertainty, doesn't it? Yeah. The bulls see the FSD potential, the bears see the current hurdles and risks.
And interestingly, the average price target across those analysts actually implied a small downside, maybe 3%, from late April prices.
So even the optimists aren't necessarily predicting a huge jump right now.
Maybe suggesting the current price already reflects a lot of that future hope.
That's a critical point the article raises. Tesla's forward earnings multiple is sky high, 135 times.
Explain that multiple again briefly.
Sure. It compares the current share price to expected future earnings. 135 is extremely high, meaning investors expect massive future growth. The question is FSD's success already baked into that number?
Because if it is, any slips or delays.
Could cause a big correction in the stock price. High expectations mean high risk if things don't pan out perfectly.
Okay, makes sense. Let's pivot then to Pony AI. The article calls them the scrappy challenger.
And the size difference is stark, right?
Huge. Tesla's market cap, around $884 billion. Pony AI, about $3 billion.
Much, much smaller. Different stage entirely, which means...
More room for percentage growth, maybe, but also likely more risk.
Typically, yeah. Earlier stage, less established, maybe not profitable yet, higher potential upside and downside.
And Pony AI's stock has certainly seen some upside recently. The article says it more than doubled since late April 2025.
Whoa. Okay, that's a significant move. Something must be fueling that.
It seems a big part was their 7th-gen FSD system reveal at the Shanghai Auto Show in May.
Ah, a major industry event. Unveiling new tech there gets attention.
Investors were clearly impressed.
And Pony's management, are they making similar claims to Tesla about safety?
Yep. Saying the new software is safer than human drivers. Seems like table stakes now in the FSD game. You have to claim superior safety.
It's the barrier to entry, really, for trust and regulation.
The CEO, James Peng, also talked to the South China Morning Post, claimed an advantage over competitors like Waymo.
Also,
said Pony AI has greater tech integration, sort of designing the hardware and software to work seamlessly together.
okay, that makes sense. A tightly integrated system could potentially react faster, more reliably, optimizing how sensors, compute, controls all talk to each other.
But here's maybe the biggest headline grabber for Pony AI: cost reduction.
Oh, how much?
They claim the latest system is 70% cheaper to build than the last one. 70%.
Wow. Okay, that is potentially massive. Cost has been a huge roadblock for FSD, especially LiDAR and compute power.
If they've really slashed costs that much, it changes the economics significantly. Path to profit looks clearer.
Makes commercial viability seem much closer. That's a game changer, potentially.
And they've got a new partnership, too, with Tencent.
The Chinese tech giant, that's a big deal.
Leveraging WeChat, Tencent's mapping tech.
Yeah.
The idea is to accelerate commercialization, especially in China.
That gives them huge potential market access, tons of mapping data, integration into a massive digital ecosystem. Very strategic.
Now, Wall Street coverage isn't as broad as for Tesla, obviously, but the article flags 3 firms initiating coverage since late 2024.
Who are they?
Goldman Sachs, Bank of America, Deutsche Bank, all big names, and all initiated with buy ratings.
Okay, so positive ratings from major banks. That definitely signals growing investor interest and confidence.
And their price targets suggest, well, potentially doubling from those late April levels.
So a much more bullish consensus compared to the split we saw with Tesla.
What's the thinking there, according to the article?
It seems to be that combination.
Yeah.
They see Pony AI as maybe leading on the tech front now, plus the cost cuts, the Tencent partnership.
And maybe just more growth runway given the smaller starting size?
Exactly, higher growth potential.
Yeah.
But the article does add a note of caution.
Right, risk. They mentioned Pony AI had significant financial losses in 2024.
Which isn't unusual for companies pouring money into R&D and growth, but it's a reminder high potential comes with high uncertainty.
So summing up then, 2 companies, same goal, FSD, but Wall Street sees them quite differently right now.
Yeah, Tesla. Amazing tech progress, huge ambition, but facing questions about the CEO's profile, that sky-high valuation, and the realism of those timelines. Cautious optimism mixed with real concerns.
While Pony AI is getting a lot of positive buzz, tech advancements, those cost savings, the Tencent link, leading to strong buy calls from the analysts covering them.
It looks like investors seeking that high-growth FSD play are really noticing Pony AI, even with the acknowledged risks.
So for you listening, it's a fascinating contrast. Tesla, the giant, navigating tricky waters despite its lead. Pony AI, the challenger, gaining momentum fast.
And it underlines that analyst ratings are useful, sure, but they're just one snapshot. This picture is big, and it's changing fast.
Which leads us to our final thought for you to consider. We've talked about analyst views, tech milestones, partnerships, costs. But looking ahead, what other factors, maybe things analysts aren't focused on right now, might ultimately decide who wins in this FSD race? Something to ponder as this whole landscape keeps shifting.
Definitely something to keep thinking about. Thanks for diving deep with us.